So there's been a lot of talk about AI and investing in AI, I'm sure, as we've seen at this conference over the past few days. But I wanted to get into kind of talking to you guys about how AI has tangibly changed your investment thesis over the past 12 to 18 months. There's been a lot of talk about it, but tangibly, has it actually changed how you look at your investing? Maybe Yalda, we can start with you.
Yeah, thank you. Bracket has been investing in artificial intelligence since we founded Bracket back in 2017. It's always really been part of the core thesis.
Okay.
And part of our DNA at the Bracket level. I think what happened over the last 12 to 18 months is you've seen an explosion of opportunities in the universe, primarily driven by the explosion of foundational models like DeepSeek and OpenAI. Right. So the universe of companies that we're tackling has expanded, and as a result, the number of investments and the size of the investments have increased as well. But something that I'd like to say is not all AI is created equal. Okay. And Bracket Capital is a value. We like to consider ourselves as value investors in growth. And as a result, we really take a disciplined approach of how we tackle the different layers of the AI stack. So for example, on the hardware side, we really treat these as infrastructure investments. Then you have the foundational model side. Obviously, that's very exciting, but we also think that that's a sector that at the moment is quite overbought and overvalued. And out of the 7 investments that we've seen in this space this year, we've actually only made 1. And then you have the application layer, and that's where it gets tricky, because you have a lot of software companies that are actually masquerading themselves as AI companies. And what we like to do there is invest in companies that perform thanks to artificial intelligence, but are not necessarily priced like artificial intelligence companies.
Got you. Okay. And how about you, Jack? How has it changed tangibly over the last 12 to 18 months?
Yeah, I think I'm personally surprised by how quickly AI has become so ubiquitous. And so I'm really actually quite surprised. So, out of the companies that we look at, 95%, I would say, roughly have some AI component within their overall recipe. And I wasn't expecting that. So that's happened much more quickly than I would have thought. That being said, is there an AI bubble? Yeah, there probably is. AI coastal bubble, I think, in the United States at least. It's just crazy how, in a relatively short period after the excesses of the market in 2019, 2021, we're having companies that are raising, capital at, pre-revenue stage, in the tens of billions of dollars valuation. That just seems absurd. But we'll save that for maybe a later chat.
Okay. And in terms of new and exciting trends in AI, Yalda, can you speak to what's sort of exciting you at the moment?
Yeah, rather than new and exciting trends, something that we're deliberately doing at Bracket is actually looking at overlooked concerning trends that are treated as an afterthought, especially as it relates to the impact that AI is having on society, the negative impact. So for example, we've invested in companies that we think will have a positive impact on society. We've made investments in education platforms that are democratizing access to education in the marginalized world. We've made investments in platforms that are making transportation links safer. And in line with our mission at Bracket Foundation, which is to leverage the power of AI for social good, we're really looking at platforms, and we back them, that are making the internet safer for children, especially as it relates to online abuse, which is a trend that we're seeing with the rise of deepfakes and AI-generated CSAM. So that's a different aspect that we're tackling from a contrarian approach.
Okay. And in terms of, I feel like we've seen a lot of cycles of tech euphoria before, thinking of the dot-com bubble. What are the biggest risks that you're seeing in terms of potentially valuation bubbles, regulatory drag, even talent bottlenecks? Are you concerned about any of those things, or are you sort of steaming ahead? Maybe, Jack, we could start with you with that one.
Sure. So I think the talent bottleneck is arguably the one dynamic that's not talked about enough. Okay. And so if you think about kind of in the greater world, coming from a U.S. perspective, so probably having to exclude China, unfortunately, how many world-class computer scientists, engineers are there that can really move the needle with respect to AI? And I would argue that that number is probably in the It's in the thousands, probably the low thousands. And so because of that scarcity, these folks are very expensive.
Right.
And so most startups can't afford these types of folks. And so who can afford them? They're the Googles and the Microsofts and Palantirs and so forth. And so they'll hire these very talented people, and they'll move the kind of the needle for AI overall for all of us, and create these ingredients that we can all use in our startups. But our startups can be able to afford these world-class computer scientists, and I think the answer is no. And so, again, I think it also then feeds into kind of the bubble environment that you see on the coasts in this kind of arms race of trying to hire these folks. And it's just kind of the nature of the beast in the sense that these folks are just very, very scarce. And so for the rest of us, we're just using the ingredients that these folks are making for us and just making our companies that much more efficient. And it's a deflationary dynamic, which is good. It's just making our companies that much more efficient at a lower cost. And so that net is very good.
In terms of the talent bottleneck, do you see that starting to change over the next few years as universities kind of catch up and provide more talent in that sense, or is it?
It's hard to, you can only, you can't artificially manufacture world-class PhDs out of MIT and Stanford and Carnegie Mellon and so forth. So I don't think there's any magic wand in that regard. And so I think this is just going to be a natural constraint kind of for AI as a movement going forward. I just think it's the reality of the situation.
Okay. And Yalda, in terms of your perspective, in terms of the big risks that we should be looking at, the investors in the room, what would you?
Yeah, we're very concerned about valuations. And obviously, we've already seen this play out many times before, primarily in 2019 to 2021, when you had companies that were raising at obscene valuations. And then you had VC that was supersizing the market. But they couldn't exit because the pricing environment just wasn't there in terms of what they were promised in terms of valuations. And as a result, we start seeing these shares, because of early investors wanting to exit, trading on the secondary market. And that very often dilutes the brand. And I think we've all seen the news lately. There is a trend of companies that were supersized. I can think of Cohere and Bijou and Rain AI that at the moment are in collateral damage in real time. They're either having to undergo a down round, they're having to delay their exits, they're either filing for bankruptcy, or very simply, they're just not meeting the multiples of revenues because they're falling short of revenues that allows them to justify these valuations. So at Bracket, we're a bit sitting it out at the moment. But that said, it doesn't mean that you're not going to have one of these companies that's going to deliver outsized returns. But I think there's a distinction with great companies and great investments. And at Bracket, we like to think that we're able to do both.
Got you. Okay. And my ears perked up when you said secondaries. Yeah. You guys have built quite this niche in the secondary market. Can you talk about that at all? I mean, we've seen, I think the IPO market in the US is still seeing some weakness. How do you see the secondary market playing out and your role as part of that?
Yeah, that's a great question. Well, we think the secondary market will become the VC market over time. If you think of every single other asset class, stamps, commodities, public equities, cars, etc., the secondaries market is always orders of magnitude the size of the primary market. It's only in VC where you see colossal amount of capital chasing these primary rounds at inflated valuations. And as a result, the secondaries market make up for the shortfall of the public markets not being able to deliver, precisely because the IPO windows are closed and investors are seeking, either if you're an early investor, you're seeking DPI. If you're an early employee in a company, you're seeking cash because the majority of your wealth is signed up to these companies. And a staggering figure is that at the moment, you have $2.3 trillion of trapped capital in unrealized values in US-backed unicorns. And the exit has to come from somewhere, and we think that exit is actually going to come from secondaries market. And it isn't, ridiculous to believe that at some point in the near future you'll have platforms where you'll be able to trade shares of SpaceX and Epic and Stripe. The only reason that it hasn't arrived yet is because we haven't yet figured out standardized contract. But in the theme of today's conversation, AI will soon enough figure it out for us.
Got you. Okay. I mean, we're all based here in the Middle East, here in Qatar, and I kind of wanted to pivot to the region. I mean, where do you see the most exciting opportunities in the Middle East? Maybe Jack can talk to this. Is it simply just a source of capital? Is that kind of the name of the game, or is it a testbed for new tech adoption, and there's this growing market of consumers that are using tech, that are kind of interacting with it on the daily?
So obviously there's no shortage of financial capital here in the region, so that's a great place to start. And I think what a place like Doha or kind of peer cities here in the region can be is that if you draw a line out, say 1,500 miles, within that radius, there's several billions of people. Right. And so why can't this area then be a hub for aspiring entrepreneurs to move to get their businesses funded and to actually create a startup economy? And so the challenge, though, is there's no magic wand for that doesn't happen overnight. It just takes time. But starting with a plethora of capital is a good place to begin.
Got you. Okay. And Yalda, I mean, in terms of how you see the Middle East, is it an exciting opportunity for you?
Yeah, absolutely.
Place? Okay.
It is. I truly believe that the Middle East is undergoing its Renaissance era at the moment. Obviously, President Trump's trip here announced trillions of dollars in deals and ventures and opportunities. The good news is that a lot of that capital will actually stay in the region and help build the infrastructure needed to drive the cloud computing and the global AI revolution that we're witnessing. Racket has been in Qatar since 2013. We've always been a very big supporter of the market. We've always been an ally to our portfolio companies from an operational perspective in navigating this market and engaging partnerships with strategic allies of the region. One bottleneck that we often face at the portfolio company level looking to expand into the Middle East was the lack of a specific type of talent. But we believe now that this AI infrastructure is starting to be built, it'll attract the lost talent, and we're seeing it happening already. It'll attract the lost talent of the UK and Europe that are seeking opportunities and want to participate in this exciting innovation that is happening here locally. And we've already seen people moving to Doha, to Abu Dhabi, out of Riyadh in terms of places of choice. There's also another role that Bracket can play in the Middle East and that we're excited to participate in. There's a very vibrant tech ecosystem. A lot of the funding is happening at the early stage level, but there's a funding gap at the growth stage level, and some estimate that funding gap to be in the orders of $20 billion. And that's definitely an area where we will seek to support.
Got you. Okay. And I mean, for you, Jack, are there any companies, like specific companies, that you would say are quite exciting at the moment in the whole AI space that maybe some of the people in the audience should take a look at, or that you're excited about, potentially Middle East based or just broader?
Yeah, I can't speak to the Middle East because we're not based here, and so I come on a pretty frequent basis, but I always believe they're not going to parachute in and be the smartest person in the room, so I don't really have a great answer in that regard. Again, the AI as a topic, I mean, it's the du jour topic that everyone wants to bring up and go back and forth on. So I don't have a specific company. It is real. I guess it's just, are the valuations justified? And so I think there's going to be a reckoning, again, with a lot of the coastal AI investments. And, Yalda, you were just talking about this. And so it's going to happen. It's inevitable. It doesn't mean it's not real. It's just, what are the fair valuations? And so, again, we've seen bubbles before. It's not different this time. And this just happens to be the latest kind of du jour bubble that we're going through in tech world.
Got you. Okay. And I wanted to kind of look at, there's a lot of sort of theories about how to invest in AI. What is one idea that you think that we often have about investing in AI that in 10 years will look completely silly? Maybe Yalda, you can start.
Yeah, that's a good question. I think one idea that everyone will think is silly is that someone will actually win this AI race.
Right.
I know as humans, we're obsessed with wars and sports, and it always needs to be that metaphor, like who's going to win? Is it going to be China? Is it going to be the US? I personally believe that AI is not a zero-sum game, and there will be many winners in this space, and that's something to look out for.
Got you. How about you, Jack?
Yeah, I'll answer it a little bit differently. So when we see a prospective investee company, what happens when AI is not part of the overall recipe? Is that disqualifying in and of itself? I don't know. But what I do know is that if you do make an investment in a company that doesn't have AI in the recipe, you better make sure that you understand why, because the worst case scenario is that at some point down the road, a competitor to that company comes along and figures out a way to bring AI into the recipe. So that's very interesting. So I would say, the investments that I've done with my fund in Arizona, I'd say 90% of those companies have AI as some component. And again, Arizona is not a hotbed of AI per se. But again, it's happening in a non-coastal area where AI, again, is a predominant variable in the vast majority of the companies. So I think that in and of itself is interesting.
Got you. Okay. And the last question I wanted to kind of touch on is, taking a step back, broadly speaking, do you think AI is overhyped, or do you think it's a real opportunity? I mean, I've certainly heard AI mentioned a lot. We were talking about this before we came on. Maybe Yalda, we can start with you. Overhyped, opportunity, what's your view?
I think it's a little bit of both. Again, it depends where you're looking on the AI stack.
Right.
Some companies are clearly overhyped and overvalued, and we saw this with the crypto trend and the fintech trend back in 2019, where we're actually investing in those companies, the same exact companies, that have benefited from these billions of dollars of investment that have funded their growth, but are now trading at multiples that are much more reasonable. It doesn't mean that the companies are not great companies. They're amazing companies. But again, there's that balance between great company and great investment, and where do you come in and the balance that you create.
Right, cool. And how about you, Jack? Overhyped opportunity, or are you sick of talking about
So I think
AI?
Longevity.
I think pure play AI is overhyped, and I think that's where the bubble exists the most. And that's a coastal phenomena, so I don't deal with that with my fund in Arizona. But again, not to sound like a broken record, but the ingredient that those coastal friends are making those ingredients are amazing, and I see them in so many of the companies that I look at. And so there's far less excess valuation in that regard, but again, it's not a pure play. If you're a pure play and you're competing with the hottest AI company coming off of Sand Hill Road with all the Stanford engineers, that's very difficult. That's very, very difficult. It's not to say that there aren't great companies in that regard, but then you also then have that same competitive dynamic where you're trying to hire the world-class engineers from Google, from Palantir, from so forth, and that makes it even harder.